All right. Hey guys, Brad here, and we are going to dive into the markets through the lens of Elliott wave theory. First, I have got to give a shout out to Armando, the professor trades. His videos on market structure. Highly recommend that you get check out these videos if you haven't already. He made 3 of them recently. I'm going to share the links in the description of this video. I highly recommend that you watch him. I've watched him multiple times, and for us inside the club, he just reiterates these things over time. And the more you can internalize how to identify market structure points and start marking up your charts just as he does, uh, I cannot overstate the efficacy of that style of analysis for scalping and for day trading. It's undeniable. It's wonderful. And Armando is an amazing teacher. So I highly recommend you go check out those videos. Now, when I get to a little further down in the crude oil chart, I'm going to show you, I'm going to do a replay because the way I utilize Armando's work is I put the levels on my chart on the higher time frames. And then I also use Elliott Wave, where Elliott Wave has a strength is for breakouts, giving you targets that maybe a supply and demand zone isn't quite there yet. Fibonacci uses projections in Elliott Wave to give you an edge when things break out or break down. So you have some ideas along Fibonacci lines of where the support should exist. This is especially true at instruments that are at all-time highs, because even when something breaks out, what do you do for supply and demand? Well, Elliott Wave has no issue with that because there's always Fibonacci extensions, and experienced practitioners know what are the typical extensions to get hit depending on the context of the wave structure. And that's where my area of expertise comes into play. But the two methods combined, Armando's use of a structure basically, and he also is using Fibonacci, but then you combine Elliott Wave, you put it on top, and you end up with a confluence between two methodologies that give you highly probable areas of entry or exit. All right, let's start with the crude oil chart. We're going to dive into the uh, daily chart first and then work our way down. So here's a daily chart. And basically what we have is a breakout of this chop fest going all the way back to that last high back in October. We've been moving in largely in threes. I don't want to get all academic on you in Elliott Wave, but I'll just say this for actionable levels, just so you know, we are looking at a potential 5-wave impulse, which technically may have already finished up, but I don't think so, because when we drill down on the lower time frames, we'll get a little bit more insight of structure on the lower time frames. But just looking at this daily chart, it is, first of all, the important thing was it broke out of this sort of triangle looking formation. It broke out, and then another way you could look at this is it made a higher low here over this low. It made a higher low here over this low, and then it finally made a higher high over this high. So I viewed that, and so did the professor, as a breakout. Okay, and then now I'm using what is called a ratio box in Elliott Wave speak. Without getting into the weeds of Elliott Wave, whenever you see this sort of green colored box with the words 1 through 3 versus 5 ratio, I don't know. I know you guys are on small screens. Let me just zoom in here on this area. So if you're on your phone or on an iPad or a small screen, this ratio box, it's telling you what it is. See the words up here, 1 through 3 versus 5 ratio. What that means is Elliott Wave discovered, Ralph Nelson Elliott discovered, that if you take the entire length of the low through the top of wave 3, so you measure that, and then you take that length and you project it from the bottom of wave 4, typically a wave 5 likes to terminate between the 618 and 764 of the entire length of 0 through the top of wave 3. I'm not going to dwell on this, okay? It's a simple ratio measurement that I use as a projection. And all it is a clue. It's not hard and fast. I'm not, I'm going to refinance a house and go long until I see this box. Nope, not at all. There's nothing certain in trading. We are dealing with probability. So this is the first clue that price could come up here. The second clue, just normal Fibonacci, Elliott wave projections always look for a fifth wave to terminate, depending, right? There's exceptions to everything, okay? But generally, the 200 fib is a decent target. Let me put the 200 on here. So we've already wicked above the 200. We've already wicked above the 200. So what we're going to do now is drill down on the lower time frame so we can examine the structure internally, because one of the really cool features of Elliott wave theory is that Elliott wave theory understands that markets are fractal. And really all that means is self-similar at scale. Okay, so that just means if you have a 5-wave structure on a daily chart, okay, if you already know about Elliott wave, you know that waves in an impulse, inside of waves 1, inside of wave 3, and inside of wave 5 will exist another 5-wave impulse. So it's fractal, self-similar at scale. So in other words, inside of the wave 5 that we are looking at right now on this daily chart, we cannot see the internal structure, right? Because it's just one giant candle for that day, which is Friday. So we're going to drill down and look at the internal structure because, as I was just saying, the entire structure is in 5 waves. So inside of wave 1 should be a 5-wave structure. Inside of wave 3 should be a 5-wave structure. And inside of this wave 5 should be a 5-wave structure. So at this scale, the daily chart, the impulse that I'm looking for suggests that it should extend and come up here inside of this ratio box. And there are some fib extensions for a fifth wave, which in this case are the 2.236 fib and the 2.382 fib. So this is called confluence. There is confluence between the ratio box and the ratio box and the actual fib extensions. Okay, so there's also these other highs over here that are in the same vicinity as this box. So this is another Armando thing. He likes to draw zones based on those wicks. So if I put the top of that zone at the top of that wick and the bottom of this zone at the top of this wick, I find it interesting that it comes in right at the top of my ratio box. So just on common sense, if you're into supply demand and structure of price, we know because we see it over and over again, price, it's either going to break out or this level would also act as resistance. So based on the Elliott wave, and I'm combining the methods, but based on Elliott wave projects, and this projection with these white fibs, this projection I put on right after we bottomed here and started moving up. I mean, did I know it was going to come up here? No. But this is the projection. So we know from supply and demand, wouldn't it be logical if price comes back up since it has broken above this level and it closed above this level? In other words, it took out this wick and it closed the day above that wick. So we're going to drill down now on the lower time frame to look for the internal structure here to try to discern, is this the top? Let's put a line there just so we can see what that is. I'm going to use the magnet. I'd like to get it exactly on there because Elliott wave is to the penny. Okay, 77.86. Is that the high? It could be the high, just taking it at face value, but let's drill down to the 4-hour now. Okay, and just move this out a little bit. So now we can see some areas of structure that I've already highlighted. Okay, but really let's keep it on point with whether or not this fifth wave has topped or not. So the way I put the Fibonacci on here in Elliott wave world, if you already know, where you think a low, if you want to see if this is a lasting low, we're going to put the fib tool on there, measure up to here. Okay, you can use the fib tool, the trend-based fib extension tool, which gives you 3 clicks. So 1 click goes on the swing low, next click goes on the swing high, third and final click goes on the swing low. And then that creates these projections, which you can certainly pause the video and grab these and program your Fibonacci tool to look for the 1618, the 200 fib, and then any extension. Okay, so actually let me put I notice I don't have the 2236 on there yet. So now I do. Okay, so if we are looking at this as 1, 2, 3, 4, okay, and just for reference, that's this 1, 2, 3, 4. So what we're trying to discern, what's that low right there? 72.82, 72.8, right. So here's the low, right? So 1, 2, 3, 4. We're pretty confident and comfortable with this structure as being a 3-wave structure. 1, 2, 3 with a 4th wave in place. And now the question is wave 5 done or not? So I'm actually going to drop down one more level to see greater detail. Okay, so this is that potentially final wave as wave 5. Okay, so remember, we were thinking this is the bottom of wave 4. So if that's the case, we need a wave 5. And the question is this the top or not? Well, first of all, we call it these shorts because anytime price extends that much, and you know what I use? I don't want to make this video too long, but I like my 3 EMAs. These are Fibonacci 3 EMAs because what I've learned in my experience, this is a 21-minute chart, and I'm using 3 EMAs. I'm actually using Fibonacci for EMAs. So this is the 8, the 34, and the 89. And what I've learned is that if price moves so fast above the 8 that it gets that massive separation, because look, the 8 was here while this price wave went way up. That to me, I'm just going to short that. Just simple price action. I'm going to short that. Okay, that's just like a little bonus. The 3 EMA cross, 8, 34, 89. Put it on your chart and play around with it. And also watch how when it does break out, it can hold. Notice where it holds, and notice where it back tests. Okay, this is and when you combine this using SAR, now you're getting like another level of confirmation and so forth in your trades. Okay, I don't want to make this video about that, but I'm just letting you know we shorted this, and then I was using Elliott wave to look at these fibs down here to know where to take it off. Now, the idea is, have we topped, yes or no? So the way I'm viewing this got 5 up. It barely got a wave 2. Okay, it barely got a pullback at all. So, unfortunately, this is crude oil and it doesn't behave. It's wildly volatile and it breaks counts all the time. But here's what I'm not going to argue with. I'm not going to get into an academic thing about Elliott wave. I'm an Elliott wave analyst, but I am not an academic. I'm not a scholar of Elliott wave, so I'm not going to spend too much time dwelling on things. I'm going to refer to price action. This is really my point. Yes, I'm using Elliott wave, but price is king. That's probably why I love Armando so much, is that his ability to read price action is second to none. So in any case, price action broke out. So this is a wave 3. If you've done this long enough, if you've done this game long enough, Elliott wave I'm talking about, you know that this looks like a wave 3. So then you want to look for a pullback that may not exceed the top of where this 5th wave ended, which is way down here. Actually, let me move up this line and get it right at the top of where I think the wave 1 was. So 3, and then wave 4 held above the top of this wave 1. And then it bounced. So we have this reaction. Well, if you're me, sorry, some kid is calling my kid and blowing up my phone. I don't know if you guys are even hearing that. But what you're looking at now is this came down and held that support, and look at that reaction. So the way I'm thinking about this, I don't need to predict anything, but I'm using parameters based on Elliott wave, okay? So if this is the top of wave 3, this is the bottom of wave 4, which just means obviously price, it really should not come back down below here. But if it were, It may not get below. If it gets below this level, something else is going on. Mainly, I think this may have topped. So I hope I'm not making you crazy. Let me get right to the parameters, okay? So if this is the top of wave 3 and this is the bottom of wave 4, this is a ratio box that goes with this structure. This is the ratio box of the smaller degree that I was just showing you, the ratio box on this super larger degree over here. So the low of this ratio box is 78.26. So if I go back to the 21-minute chart, this is 78.60 all the way to 79.36. So where does 79.36 fall up here? 79. Well, look at that. 79.37 is the 2382 on the daily chart. So here's what I'm showing you. There is some confluence between what I'm seeing on the daily chart, between the daily chart and this 21-minute chart. There is confluence in here. That leads me to lean towards crude oil getting another high and then a more substantial reversal. Okay, so let's get to real parameters now on this 21-minute chart. If this is the beginning of wave 5, what I think will happen, and by the way, I'm using the same tool I just showed you over there. It's going to be a 5-wave structure. Now, this is a little bit of speculation. I'm going to get to the parameters, but I'm just showing you how an Elliott wave guy thinks. You one click at the low, one click at the swing high, and now I'm just speculating. And let's just say price comes down to the 618, because that's what price very often does. It could exceed that, whatever. This is speculative. So I'm bringing that third click down to the 618, and I'm going to go select my standard template for standard pinball, and look at where the 200 fib comes in, right at the bottom of that ratio. And if the extensions 236 and the other one is 2382 come in inside of that ratio box. So if this is going to get another high, it's going to hold. Now I'm going to actually put on, this is realistic. Maybe it's going to hit the 618 to the penny and bounce, but this zone. Now, what's interesting is it's already been down here to this zone, right, as a wave 4. So if you forget Elliott wave for a second, you know how price likes to retest things and get pullbacks. The 618 to the 886 is a zone that is typically seen if this rejection right here at 76.77 is going to hold, it's going to come down. Now, if it gets above here and then gets rejected and starts coming down, all I'm going to do is move this measurement to wherever the next top is, because this is not enough to be a wave 2. But am I going to argue with price if it just keeps going? No, just like over here. This is not enough for a wave 2. 1, 2 looks great. The 3, 4 looks perfect. The 5 was muted and the 2 was muted. But look at this massive breakout. I'm not going to argue with price. This is 1, 2, 3, 4, potentially another wave 5. So this area needs to hold. So guess what? This is a parameter. This is a great parameter. If price cannot hold the 886 and it comes back down, methinks if it doesn't make a new high and comes down in here and breaks through all of this support right here, then the next likely thing it can be is a potential ABC, and it just needs to come down deeper. So, oops, I'm sorry, I screwed that up. Let me redo that. Now, look, I don't want this video to get crazy because I'm really just giving you parameters, but I cannot help but teach you what I know, and maybe I shouldn't be doing that. Maybe I need to make separate videos on teaching. Or if you want a private consultation, call it a private lesson. That makes sense too. So if it is going to be another larger 3-wave correction, I find it remarkable, actually. I can already see that this A equals C would take you back down almost, let's see where that comes in. Right exactly where that 1 is. And I said it cannot break the level of 1. So if this wants to make a larger three-wave correction, meaning A, B, and then now if it comes down and breaks this level of support, this is a target. But for right now, I'm not trading for that. I'm not looking at that. That is a potential. But I think it's crazy how the structure, just this three-wave projection, comes exactly back down to this same level. So that's why I love Armando and his methodology. It goes hand in hand with Elliott Wave. It works well. So Elliott Wave is just way more complex. I like them both. I've already learned Elliott Wave. I've already invested the time. So now what I'm trying to do is just share with you. Okay, so this is where you buy. This is where you buy. And you can stop at that low, honestly. That's a very reasonable place to stop. So anywhere down here, if it doesn't make a new high, if it makes a new high, I have to adjust these levels. But the idea would be if it's going to come back down into that zone, okay, sometimes I just take out the 764 just to clean it up. But that's when I put a zone on there, it's not just me randomly putting on a zone. Even if you don't see any fibs, it's based on fibs. Okay, so if this holds, right, somewhere in here, then look at where these white fibs project to. So this would be your fifth wave, and the way it would play out if this is going to be correct. And I'm not saying it is, but look, we're using parameters. 1, 2, and we know that the wave 3 often targets the 618. The wave 4 pullback often holds the 100 fib. And then the fifth and final wave up should exceed at least the 200 fib in white. But here I have a ratio box with fibs inside, so I'm calling that confluence. And I also need to adjust the degree of that count. And so I like to make the ratio box purple when my count is purple. Actually, I like to make everything consistent. So because I'm tracking a smaller degree on this 21-minute chart, everything is going to be purple. Whereas on my daily chart, the fibs are white, the count, the labels are white, and I always use this green ratio box on the longer time frames, and I always use a purple ratio box on the lower time frames. So this is the deal, okay? You got it. This is what I'm looking at, and these are the parameters. So if it's going to lose that support, I think it comes down into here. So what I'm planning to do is let it move around after the open. You know what I would love to see is a gap down and then let it run down here into the 618, because then I'll be buying with the idea that this, and by the way, here's another idea, Elliott Wave idea. If this does come down correctively, which means if you drill down on like a 3-minute chart and it comes down in 3 waves and then starts bouncing, okay, if it comes back up and breaks the top of this level, that can be a place where you add. So let's say you had 2 positions on down here and it starts coming off. As soon as you get 20, 30, 40 pips, let's say you got in at 83. As soon as you get to 703, 7603, that's 20 pips. You take it off, but you're letting your runner run. Then if it gets all the way up here, and it's going to rattle around, it might get rejected. This is resistance for now. But if it comes up and gets above that level of this high, you can add back the position that you took off at plus 20 pips. Add it back up in this zone with a target of the 1618. And keep in mind, these are zones. Okay? So that's the idea. And here's the parameters. So you don't want to see below 75.44. By the way, this is the February contract, crude oil futures February contract. You don't want to see below 75. What is this low? 75.40. 75.42. So in fact, let's just put a line there. Let me just put a level there. Do not want to see below 75.42. You want to see it hold in this area and then take off. Don't be a greedy pig. Take off the gain. Take off half. If it comes up in here, take off half. And then you can add that back. I would let it rattle around. Ideally, you'd see a little bit of a rejection, make a higher low, then it comes with some momentum. And then look at your SAR, look at your moving averages and add a position here just to scalp and then take the whole thing off up here. That's just what I would do, because this, isn't it interesting? You know, that's the top of this wave 3, wave 4, but then 1, 2, this is also where the 1618 comes in. So, oil likes to put in double tops. I don't trade that, but this is a confluence between this top and what I didn't know that was going to do that, but I do see that fairly often. Because why? Because this is structure. This is structure, and this is Elliott wave, and they are looking at the same exact area. So I expect this to come up into here. Maybe it pokes above it, but get rejected. I expect that. And then, isn't that interesting? This wave 4 at the 100 fib kind of just drag that buy box over. I mean, sometimes it works out like this. I'm not saying that's all going to happen, but I'm not going to be surprised if this happens. Now, different game if this breaks this support, if it keeps coming down. But you know what? You're taking your stop, trade small, put on 2 positions of whatever the smallest position you can put on, add them, and when you get up here, take them off, and then add them back and do the same thing again for this 5th wave. Same exact thing. Put 2 of them back on. When it comes up, take off 1 at plus 20 or plus 30 pips. Expect it to get rejected a little bit, but then if it gets above this level, put a buy box there and buy it, and then take all of it off. And actually, trade in your longs for shorts here with a stop a little higher. Now, just as I'm showing you this structure here, remember how we just went from this daily candle, for me saying, well, I can't really tell you if this is the top or not because I need to see the internal structure of this candle on the daily, because I don't got any structure on the daily. It's just a massive move with a massive wick. So you come down here and you go, oh, this is that massive move, and this entire wave 4 is the wick. This whole candle body for Friday's daily candle is the move, wave 3. And then the wick is wave 4. So now it's going to rattle around inside of the body of this candle and actually come up a little bit into the wick. Actually, let's see where that wick starts. This 76, 77, 70. So it's 20 cents right now off of that. That wick is almost identical with the wave 4. I find that remarkable. So, it's going to come down, back test this support here, and then take out that wick and make a new high. That's what Elliott wave sees. The potential is there for that based on structure and price action. But you know what? It's not up to us. So if below 75.44, something else is going on, get out of your longs. Sometimes what I'll do is not get out of the longs because oftentimes it'll break this level, then it'll kind of come back up, then I get out of my longs at a smaller loss. Sometimes I do those kind of things. It just depends. And also I drill down on the super nano, like 3-minute, and use SAR and moving averages. And I can't possibly post all that stuff all the time inside of the Professor's Trade. I don't have enough time to do all that. That's crazy. But that's the kind of stuff I do when I'm looking for an entry or a stop out. Okay, moving along now. Quick word. If you're watching this and you're getting value, if you're from YouTube and you don't even know who the professor is, the link to his club is below in this video. For a little more than $1 a day, you're going to get the most insane value. The guys that are already in the club will tell you, hopefully somebody will comment on this video and say, that's correct, man. Armando's the bomb. Thebomb.com. You can check out his free YouTube channel. His videos about structure, I'm going to link in the description of this video. I highly recommend that you go watch them. But if you're in the Professor Trades Club, do me a favor, drop a comment. Talk about the efficacy of the professor and what's going on in his club. So for a little bit more than $1 a day, you're going to get massive value, and you're getting the Elliott wave stuff included in there. You have 2 options. One is a little bit less than $1 a day, or for a little bit more than $1 a day, you're getting the Elliott wave stuff. It actually comes out to, I made it a Fibonacci number. It comes out to $6.18 a month additional to get all of this Elliott wave stuff posted in the room on a daily basis, usually in the morning and off and on throughout the day, and then in the evening. So you're going to have the guidance you need with these parameters. Okay, that's my plug. Now let's get back and look at gold. Now I'm going to really keep it moving and just get on with the parameters. Okay, I'm sorry these videos get too long. I can't help it. I get into teaching rather than just showing you the levels. We're looking for a wave 4 in gold. Back here, I was thinking it's not enough time. It has burned off the clock. This is the top of wave 3. We're looking for a wave 4. I don't think this is it. I really don't like this structure at all. It's coming back up, Maybe I'm wrong and wave 4 is over, but I don't think so, because in my experience, wave 4 of this degree, keep in mind this is a daily chart, needs to burn more time off the clock. Can I be wrong? Of course I can be wrong. I'm wrong all the time. All you got to do is be right a little bit more than you're wrong. And also, I'm giving you the probabilities. So the way I'm viewing this, the probabilities lean towards price coming back down. The structure inside of here also has me thinking that, because this is not any kind of a standard impulse. This is not any kind of a standard move, which also makes me think B wave. So this has come up awfully high, certainly higher than I would have originally thought. So what I have done is put on some measurements. As you know, you got the 1, 2, 3. Okay. And I used a ratio box on this internal structure, and price wicked right into that. So what I do, I went short. So the way I'm viewing this is price is going to come back down and retest this structure. Now, this is not Elliott wave. This is structure. Got rejected. Got above it, but couldn't get any traction. Came down. Got rejected. Got rejected. Got rejected. Came back up. Got a little rejection. Then it finally broke out. Then it back tested it. And then it broke. Fake breakout. Brutal. Fake breakout. Came back down. Little consolidation. Broke this same level. Back tested it with a wick, 2 wicks, no traction, no ability to break out. Boom. All the way back down to this consolidation level. Then let's try again. It says, okay, tries again, comes back up. This is all Professor. This is all Armando. Comes back up to this level again, gets rejected again. Where does it come to? Right between the 618 and the 886 of this move. Perfect retrace. I like that. And this looks very impulsive compared to this other overlapping crap over here. So that's what led me to count this as this. 1, 2, came right up to that level, got the liquidity out of this wick. Boom, I shorted it. So did the Professor, I believe. I'm almost certain we were shorting it, or maybe we shorted a little earlier. But anyway, I shorted it and put all this in the room. And the idea here is minimum target would be the 382. It should come back. So if I go down to a lower time frame, you can just, on the lower time frame, I just want to kind of show you. Now this is a 13-minute chart, and just to keep it very simple, I put a gray target zone right down here. Right, it's just above the 382, which would be the minimum for a wave 4. See, I also like where this is rejected. It's rejected at one of these fibs that delineates a 3-wave move. This is a micro now. So one of the ways I would try to be more exacting to dial in where this might project to, I'm going to use yellow fibs, because as you know, the yellow fibs is when I'm tracking a potential 3-wave move, which should target between the 100 fib, the 1236, and the 1382. So I'm using the 3-click fib extension tool. I already gave 1 click. There's the 2-click. Here's the third and final click on that swing high, which is 27.29.4. 27.29.4 is close enough. Look, I'm just teaching here again, unfortunately. So what I would not be surprised at all to see here would be a complex 3-wave move, something like this. Okay, that was already an A, B, something down into here as an A wave. Let me just make, now look, I know this is too much probably for the purposes of this, but the idea would be another something along these lines, a 3-wave move that comes down overnight into this box down here. Wouldn't it be awesome if it like bottoms in the morning and then you start the 5th wave up after the open, or even right before the open? But in any case, this is the idea. And so that A wave typically would target the 100. Actually, I have a template for this. A equals C extensions. Boom. So typically the A wave, now I did that by eye because I've been doing this long enough. You can see I just did that by eye, but see how the A wave is between the 100 fib, the 1236, and the 1382. So do I really care exactly the structure of this? No, because really what I want to see is I want to see this target box hit. Knowing me, I'll probably take off half somewhere down. Maybe anywhere below the 100 fib is not a bad place to take some gains. Let it keep coming, fine. Let it bounce. Let's see what kind of reaction it has in here. If it bounces, then I'm going to put back. I'm going to put back what I took off. Okay, and then hopefully ride it down again, and then I'm going to take it all off in here. And then I'm going to be patient, because really what I want to see is I want to see it, if it rattles around a bit and comes down into here, I want to get long. So if I have to just give you parameters, it cannot make a new high over 27.35, and it needs to come down, but you do not want to see it get below 26.81. So basically, the ceiling is in, and I believe the floor is here in at 26.81. All right, so you've got a $50 range. So what I would like to see it do is come back in an overlapping complex manner. I don't want to just see it shoot straight down. I want to see it do some overlapping complexity and get down into here, and then see an impulse 5 up followed by a 3-wave correction, and then break above this in wave 3, and then back test it in a wave 4, which wouldn't it be amazing if it's back testing this zone. We trade zone to zone, and then take it all off up here and look and short. All right, so those are the parameters of my gold. Silver, not too different. Not too different. Looking for support, looking for this to come back down and hold support. And then there's also, similar to gold, another idea that this gets a pullback and then one more high up into this zone. This would be very bullish. I will not be surprised if all of this craps out and just keeps coming down. I would be surprised by nothing in silver, because silver is just that kind of instrument. Gold is much tamer. So zooming in on silver, I mean, this is what happens when you have news. Crazy. So this is the measurement that I took. So I'm flat silver. I'm shorting gold. If you must trade silver, you should have already taken the short. If you didn't, this is a target. I would not want to be shorting silver in the hole. This could bounce. This is the kind of thing you can do that's simple. Use the 3-wave tool when you're looking for a correction, especially looking for a blue box on any of my charts. That's a wave 4. I used the same color for all of my wave 4s. It's a blue box regardless of degree. So if that was the first move down and then it bounced up to 31.67, then this could just be the A wave. Kind of like this, somewhere down here for an A wave, and then a B, and then come down somewhere down into here for a C wave. That would be ideal. A, B, C, 3-wave correction into the blue box for a 4th wave, and then with one final wave up into this zone. So a key parameter is you do not want to see this come back down and get below 30.48. This is the March futures contract of silver. You do not want to see price come back down and get below 30.48. And if we're lucky enough to come down a little bit more, get a better entry, catch support, boom. Look for the same thing. 5 up, 3 back, a wave 3, then a wave 4 that, I don't know, we'll see where it holds. And then boom, final terminus up here. Okay, that's silver. NASDAQ, let's just keep it simple. I finally found the right emoji for liquidity. It's just liquidity. That's obvious. So price loves to come back up and get the liquidity. Price comes back up, gets the liquidity. Will price come back up and grab the liquidity again for the 3rd time? So here we had this low. I got to be honest, it went lower. But look, if you just look at structure, this looks fine. LA wave, it got a little long in the tooth. This wave 5th. Actually, let me see where that wave 5, it looks a little long. Since I was just showing you about ratio boxes, let's see where that 5th wave. So remember, to measure for the ratio, you take the entire length of 0 through wave 3. Second click goes at the bottom of wave 3. Final click goes at the top of what you're calling wave 4, which in this case is 21. Actually, I'm not even going to move it. I'm just going to, this is quick, just quick and dirty. Go to my template called 3 versus 5 ratio box. Look at that. I just love these ratios. I mean, it's just a clue. I usually do this in advance. Now, I had done it earlier, but the ratio box was higher. But now that the real count has revealed itself, sure does look like it came right down. Let me get rid of that verbiage. I'm curious. I just want to see, did that... Can't make it up, guys. The wick came down and tagged the bottom of this ratio box, almost at a penny. This one over here for this A wave tagged the ratio box to the penny to the top of it. Incredible. Incredible. They never make it easy. But, you know, if you can stay small enough and trade zones, it is easier. Anyway, that's just remarkable. I didn't even measure that. So anyway, so I think that's the low. It doesn't mean that it is. It just means it sure does look like the low. It measures nicely. It's 5 down. And then now we're getting about, so for an A wave. So if you need parameters, here's what I'm using for parameters. Now I already scalped this, okay, a couple of times on Friday. And if you were in the Professor Trades Club, you know we were killing it on the long scalps on the NASDAQ. Okay, so was the professor. He saw the same. Now he saw it much more quickly than I did. He just sees it based on structure. So he was basically screaming at folks in the room, this is your opportunity to get long scalp or hold it over the weekend, stay long, and let's see what next week holds. Okay, so that is the deal. So the parameters are this last low, call it 28.75 down here. I really don't want to see it come all the way back. This pullback was deep. Now this pullback is right in that sweet spot between, actually, sorry, that's a projection. Let me see where this pullback really is. I'm just curious if it looks like it's around the 618. Let's see. Price is now hanging around the 618. So, but anywhere between the 618 and the 886 is ideal. And check out this confluence of this ABC. Remember, I just taught you again that you really want to see wave 3 hold between the 100 fib, the 1236, or the 1382. Now, I just happen to have left this here because of the way this is holding support at the 886. I didn't put the 1382 on there. That's just a judgment that comes from experience. So who cares? There's confluence here is what I'm saying between the zone of the 618 and the 886 and these yellow fibs. Cool. And you've got the ratio box down here. And you've got the context of this being 5 waves down, which after a 5-wave move going in anywhere at any degree, you should see a reversal. That's just the way the universe works based on Fibonacci. I know I got deep on you there for a second. That's philosophy, but that's the truth. You can't convince me otherwise. So anyway, we've bounced and now we've got another retrace. If this holds in this box, I think it is much more likely that we're going to come up, but we don't need to guess. We don't need to guess. Actually, this is an old measurement. Let me take that off. We don't need to guess. I'm going to keep it very simple. I'm going to do a quick and dirty for you, just a simple projection. And the most conservative thing you can do is trade for the 100 fib. Now, I don't know if this bottomed yet or not. Okay, so I'm just going to put it at the one. I'm going to put it between the 100 fib and the 1236. Do you see that? I'm putting it right in here as if price is going to come down and just get, because I don't know. So I'm speculating. I'm giving you a warning. I'm speculating right here, okay? Speculation. And the idea is if this holds in this box, and it doesn't even have to be an impulse actually, because I'm just thinking of this as a B wave bounce, but these are the clues that help you get in the position. So if it can come down and hold in here somewhere, I'm actually already long. I've already added once. I'm going to add again if it comes down here. So I'm still fairly small. I'd be about, if I add, let's see, I already had the original, then I added twice 3. I'm going to be roughly between 50 and 75% of what I would consider my normal full position. So I'm still not quite a full position, even if I add one more time and it comes against me. Okay, and then I'm closer to the stop. I'm going to add down here. Maybe I don't get a chance to add. Maybe it just goes up. Fine, that's fine with me. So, but the idea is these fibs and look at that. This fib and this zone, this fib zone, is right where that liquidity is that I was speculating on. So as a scalper, I'm definitely, if I'm lucky enough to see this make it to here, I am definitely taking half. Definitely. Okay. And then if it makes it to the 1618, I'll probably take all of it off and look for a pullback and then play the same game again. Okay. Yeah, I keep forgetting this is a 21-minute chart. So, I'm not going to be up all night. I'm going to do that. If it opens, I'm going to watch the open Sunday night tonight, right before the Commanders play football. But if I get long here, I'm just going to set my stops. I'm going to put an order to sell half here. And I'm going to, maybe after the game, if I'm lucky enough, if this comes up here and it's late at night before I go to bed, 11 o'clock, 12 o'clock, and I've seen that I've already covered half automatically using my OCO, I'm going to set a trailing stop on the remainder of my position, and it's going to be wide. It's going to be a very wide, like 50, 75 point trailing stop. So if this wants to break out while I'm asleep at night and rip higher before it gives a pullback, at least it's going to pull up. It's going to pull up the stop on my remaining position. And who knows, maybe then when it comes back down, if it doesn't touch where my stop was last left, then maybe I'm still in a position when I wake up in the morning. And then I'll raise the stop manually and still make a trailing stop from that level. Okay. I know I'm talking too much strategy, but these are the parameters. This low right here, 28.74. Obviously the top is up here, but I would start taking off the scalp at 21, really the bottom of this zone, which is just shy. Call it 21.220. 21.220 is where I'd start taking gains. 28.74 is where I'd stop out. Okay, that's the deal. Quick look at the dollar. It did break out. It is consolidating. It has enough for a wave 5 to be, there's enough in place for the dollar to have topped already. Now, this is interesting because it kind of metals, I don't believe in them being strictly correlated, but I do feel if the dollar totally crapped out and just lost it and created an impulse down, then yeah, and then a 3-wave bounce, and then it keeps going lower. Yeah, I don't believe in correlations, but I think it would be hard pressed for the dollar to really roll over and get momentum and not have the metals go higher. But I'm not, the charts are saying that as well. I'm not just saying that. I'm just saying there's a setup here for silver and gold to get a pullback and another shove higher. So if that would make sense with this consolidating. If it wants to come up a bit more while the metals consolidate, why am I even talking about correlations? It's hard enough to get one chart right. So you start trying to get two charts right and then correlate them together. It doesn't pay to do that. It doesn't pay dividends to do that as a day trade scalper. Ask me how I know. Okay. So just keep an eye on the dollar. These are parameters. There is a way for the dollar to keep extending. There's another fib up there. It is possible. I'm not going to get in the weeds at all here on the dollar, but I'm just going to show you, because it's a 1-hour chart, but I'm just going to show you that if the dollar, something really bizarre happened and it just broke out. I know it's crazy, but these fibs, I don't talk about these every time I show you the dollar because it's just way out there. But the idea would be, it is possible that the dollar needs to come up. You've got another fib here. Where do these fibs come in relation to the weekly chart? And you've got the bottom of the zone is at 112.800 and the top is 113.200. So 112.800, 113. So, well, I like the 111, 116. Let's see where that is. 111. Look at that, the 1236. So, what's this white fib here? That's basically 111. Very, very close to 111. So 111 to 111.300. This isn't, look, I got the question mark there. If this breaks out, this is the first place I'd look for resistance, is right here, which on the weekly is this 111 area and just shy of the 111. But you can see the plan, what I'm thinking for the dollar going into all the rest of this year, whenever this tops. Okay. And that's going to be very impactful for what's going on with these currencies. But listen, if you want more currencies, you're going to just have to join the club. I've already been talking too long, man, too long. If you get value, please hit the like button. If you're watching these videos every week, twice a week, and you're getting value, it helps me a lot. Thank you. Hit the like button. If you're new and you're getting value, subscribe. Hit the notification bell so you'll be made aware when I make these videos. Read the description in this video. There's a bunch of value I'm dropping down there, especially the free videos from Armando about structure. It's much simpler than the stuff I'm doing here. Much simpler. I love it. I love what Armando's doing. And I'm using it in conjunction with my Elliott Wave stuff. Cool. All right, my people. Thanks for watching. I hope to see you in the room. And if you have any questions about Elliott Wave, drop them in the comments or anything else on your mind. I will reply, promise. Thank you guys for buying me coffee. There's a link below for coffee, K-O-F-I. It's just a little energetic exchange. It keeps me going and motivates me to keep making these videos. Buy me a coffee, $5. That's all it is. It's a way that I know you're appreciating. I know you're getting value, and I know you want me to keep doing these videos. Cool. All right, you guys, take care, and bye-bye. Go Commanders, NFL. See ya.